Hello traders, this is Rich from Tradesight. I want to take a few minutes and talk about the shares of Apple Computer because we've just encountered a very important technical development on the chart. Let's first take a look at the weekly chart and just make a summary of the current technical condition here. You can see in the weekly chart in front of us that we made a double bottom here that spanned over the course of many months. We first made this touchdown in April, made this first low, rallied up a little bit here, only to fall back again and retest that same level in September. That retest in September did prove to hold and also was the launching pad to pivot the stock and to take it from under 400 to up to about $550 per share here. So we did have a pretty good pivot and a good move to the upside. Without putting the fibs on here, we've basically spanned about 50% of the decline from the all-time high down to the current lows. So right about at the midpoint here. But what's probably the most important technical feature is what's happening in the daily time frame. So I'm going to switch time frames now. We're going to drill down to the daily chart. All right, so here we are in the daily time frame now. Looking back to the left of the chart, here's the July low. That was the retest of the April low. After that, we pivoted and had a number of impulses to the upside. In fact, there were three that we could, objectively quantify as decent impulses to the upside. The first one here is boxed out in yellow. You can see that we did have some construction to the upside, a little bit of a fall and a pullback, only to recharge itself and make this push up and above $500. After that, we essentially leveled off and went flat, and then had this third impulse to the upside here that was pretty well constructed, took out the old high, and paved the way for this seeker exhaustion signal. What we did was we locked in the minimum 1 through 9 bars on the seeker momentum phase. Then we started printing the red numbers, which is the seeker trending phase. And we got some pretty good extension here on this last little push, breaking out above this recent consolidation. What we did was we actually locked in that seeker exhaustion warning as of the previous day's close. So now we've got our 13 exhaustion in place, which will become a sell signal as soon as we take out the 10 EMA to the downside. Near-term technicals that are going to be important is going to be the risk level, which is the magenta line just printing just above the candle here at about 578.5. That's going to be your stop loss on the trade if you're playing in the bigger time frame once the trade becomes effective. To go to the downside here, the 10 EMA is going to be key because that's going to be the determination when we flip back to short-term negative on the chart. So those are a couple things to keep in mind. This is also important because this is the first time of this whole run since the low in July that we've gotten an exhaustion warning from the seeker study. So this is going to be pretty important here. It's a multi-month signal. We had 1, 2, 3 momentum moves to the upside, and now we're finally getting our exhaustion warning. So traders should take heed and start to look at the at Apple on the short side rather than the long side. Could take a little while to kind of wiggle through. We're going to be in some light volume here at the end of the year, but this is one that's definitely looking like it's more at the end of a run than the beginning, and certainly the seeker is agreeing with that. We'll update this chart as it develops and check back and talk about the construction as it develops, and keep you informed. So check back and keep on top of the technicals. We'll be doing that in real time in the trading lab. So until then, this has been Rich for Tradesight, and thanks for listening.